Few things worked for financial markets in the first half of 2022. The S&P 500 fell 21%, putting it into bear market territory, and setting the index up for the worst start of a year since 1970. Now, one of the few bright spots in markets was commodities, particularly oil and energy-related companies, as the price of oil topped $100 a barrel. But not much else worked for investors. So with the bad first half of the year behind us, surely investors are looking for positive news for the rest of the year. And if history is any guide, there is reason to be hopeful. When the S&P has fallen by at least 15% in the first half of the year, it has risen on average by 24% in the second half of the year. That's not necessarily enough to make up for losses faced in the first half of the year, but it does take some of the sting out. So for investors now, what can happen for the rest of 2022? The first thing on everyone's mind this year has been inflation, with inflation hitting a 4-decade high, with the price of food, gas, and services going up due to geopolitical tensions as well as a return to post-pandemic living. In fact, inflation hit 8.6% year over year in May, which was its sharpest increase in more than 40 years. And that level is well above the Federal Reserve's target of 2%. Now, that high inflation hits companies in two ways. One, companies feel higher costs for their materials and higher labor costs. But the second way is that companies also realize that their customers are also facing higher costs, which means that they may not be able to push those higher costs to customers in the form of higher prices, or if they do, they have to be careful in how they do so. And that ultimately affects a company's bottom line. The second thing Wall Street has its eye on is the Federal Reserve. With those inflation worries, the pressure is on the Fed to cool down an economy that is running hot. Now, the main way that the Fed can do that is by raising interest rates. And in the first half of 2022, the Fed did lift interest rates, including a 75 basis point hike, which is the first time it's lifted rates that quickly since 1994. Rising interest rates translate to higher borrowing costs, and they generally cool the economy and in turn inflation, because as costs go up, households and businesses rethink some of their consumption, which should cool demand and give supply time to catch up. At least that's what would happen in an ideal world. But worries over inflation and what the Fed does to control it takes us to the third thing that Wall Street is worried about this year, and that is a recession. A number of business leaders have already sounded alarm bells, with Tesla CEO Elon Musk saying he has a very bad feeling, to JP Morgan CEO Jamie Dimon saying that he sees a hurricane coming. And the reason for those concerns is the Fed generally doesn't have a good track record of slowing down the economy without tipping the economy into a recession. And because inflation has run so hot for so long, people are worried that the Fed is going to have to overreact to get things under control, or put another way, slam on the brakes, which ultimately may not be good for markets or the economy. So what's an investor to do in this climate? That brings us to the fourth theme for 2022, which is investors may want to look for active management or stock picking in their portfolio. The reason for this is there are going to be some companies or sectors that are better able to navigate the Fed's rate hiking path than others. And these companies will be ones that generally produce goods and services that are deemed essential. So even if there is a slowdown in the economy, people will still do things like pay their cell phone bill and go grocery shopping. Maybe not to the same degree that they were before, but they seem to be safer sectors. So investors will want to be looking at companies that have strong balance sheets and business models that can withstand downturns. So you tell us, what are your plans for the rest of 2022?